Right, let's quickly get through 11 through till 15. So what do we have here? Over here we have a discussion about the balanced scorecard. So this is something you can please review. You need to review this anyway because you need to compare this with the Fitzgerald. There is another model that you need to compare it with. And so this is a good model to remember, the balanced scorecard, where we're looking at non-financial performance indicators, so to speak, versus your financial. So the argument is the non-financial drive the financial. And with your non-financial, you have customer perspective, you have learning and growth as well, and you have internal processes. So this is focusing on here learning and growth, and it's asking the question, what might be appropriate for monitoring innovation and learning amongst your staff. And training, of course, 100% will be looking, the more your staff are trained, right, of course, 100%. And revenue generated, tough to measure, but percentage of revenue generated by new products and services, definitely. And I mean, this is so 1 and 2. I almost went for a process of elimination. There is no 1 and 2 on its own. 3, I was slightly suspicious, but then I picked up on the fact that you have labor rate turnover, and labor rate turnover, here we see the fact that with labor rate turnover, if you do have a high labor rate turnover, then you can expect that people are probably not developing as well as they should. So the answer here is A, 1, 2, and 3. Now let's look at this one very quickly. We see here that we have a company. This is a good one here. The time. So what you want to do is, if you remember, what you have to do here is create almost a table. Right, this is asking for the total time it takes to make units 5 to 8. What we need to do is to have the unit, and then have the average time, and have the total time, and just build it. First unit, 7 hours, total time 7 hours. That means the second unit, so the average time is 0.9 times 7, which is 6.3, and therefore the total time is 2 times 6.3, which takes you to 12.6. If you double that again, you have 4, and then you have 0.9 times 6.3, which is equal to 5.67. The total time must be 4 times 5.67, total time 22.68. Then you have, if you like, 8 units, that's 0.9 times 5.67, which is 5.103, and the total time must be 40.82. This question is, what is the total time it takes to go from unit 5 to unit 8? So it must be the difference between these two. So that's how we build this thing. Just create your 3 columns and you're fine, literally. So subtracting 40.82 minus 22.68 takes us to 18.144. Cool, great. Then here we are, question 13. Interesting one here. They're looking for residual income. Remember, residual income is the profit minus the company's kind of agreed level of, benchmark level of interest, so to speak. So in effect, for this new project we have here, we were expecting you to make 90,000, because you've done this already, so I can jump straight to it, minus the 10% times the actual capital required. So that would have been 10% times 500. So the new project should bring you 40,000. But the question is asking of the entire division. So the existing projects had, if you like, profits of, the profit here says return on capital employed was 12% of the capital employed. So 12% of the capital employed of 2 million comes to 240,000. And when we take away 10% of the capital employed, which was 2 million, here we have 200,000. So here as well, the residual income was 40,000. So both of them together give you a total residual income of 80,000. And that, you could have added these together and then done it that way. But the key point here is that profit and residual income is the difference between the actual profit minus the benchmarked rate that we expect, if you like. And so here what are we saying here? So question 14, reports should not, which of the following can be made in a manager? Reports should not include items about uncontrollable items. Now, this is not true. Just because we say it should not include these, just because it has uncontrollable items doesn't mean it can have them, but we're just not judging the manager on those uncontrollable items. We're still judging them. We're just saying that if you like, we shouldn't be judging them on it. So there we have that. The other one, very quickly, is that only encryption can be used to ensure security. That's not true. So the truth is that neither one nor two are correct. And then finally, the last one here is that TPS structures kind of your day-to-day running of the business, sort of software, if you like. So definitely, it's very much operational. So the failure of TPS systems can stop businesses from operating. This is definitely true. TPS systems support structured decisions. That's the problem. Structured decisions, you're typically looking now at your management information systems supporting your kind of management decisions. So someone's taken that kind of day-to-day operational information and created some sort of analysis and some sort of reports with it before we can actually use that information. So in effect, the only thing that is true here is number 2. So great. Those are the question 11 to 15, and I'll see you in 16 to 20.